Hello, everyone, and welcome to Fairfield County SCORE's webinar, Business Planning Simplified, Step by Step, sponsored by M&T Bank. Brian Reclatis from M&T is here with us today. He's the SBA Regional Specialist for New England. Brian, do you want to say a few words?
That's great. Thank you very much. We love partnering with SCORE. We've been partnering for years. Really appreciate it. Thank you for giving me the chance to speak and contribute where I can. We're really taking the SBA flag for M&T North all the way to Maine. I've been charged with that responsibility. So it's something SBA is near and dear to my heart, and working with business clients, grow their businesses accordingly, hire more employees. It's all great stuff. And a presentation, something like this with business planning so that business owners can use that as their guide moving forward is absolutely integral to their business and their success. So really can't thank you, everybody at SCORE. Thank you for the attendees, for the opportunity, and seeing how we can help. That's really it.
Thanks, Brian. I'm Tim Ryan, a business mentor here at Fairfield County SCORE, and I'll be your host. Our speaker today is John Harmon. More on John in just a minute. First, let me share some brief info about SCORE. SCORE is funded by a grant from the Small Business Administration, so all of our services are completely free of charge. There are about 300 SCORE offices in the U.S. with over 10,000 volunteers nationwide. Fairfield County SCORE is one of the largest and highest rated chapters in the nation, with over 100 volunteers comprising a wide range of expertise. We offer 3 value-added services to small businesses, which are all accessible from our website at fairfieldcounty.score.org. First, we provide free one-on-one counseling through face-to-face meetings, telephone calls, emails, and video conferencing. Second, we produce over 100 educational workshops and webinars each year on topics of relevance and importance to small businesses. And third, we have extensive resources and tools on our website, including templates to help you build your business plan. So let's get started with today's event. If you have any questions during the webinar, please use the chat box located in the lower part of your screen. To respect your time, our webinar will end promptly at 1 o'clock. This session is being recorded, and the link to the recording will be sent to anybody who registered and will be available on our website within the next couple of days. Now to our speaker. John Harmon is a SCORE volunteer. He is Managing Director of Agilent Consulting Services, which advises small and medium-sized businesses on strategies for growth and operating excellence. John has held senior leadership and executive positions in sales, marketing, quality management, strategic planning, and new business development at Eastman Kodak, the Gartner Group, and Pitney Bowes. John, it's all yours.
Well, Tim, thank you very much. Let me make a couple of opening comments before we get into the material. First, this session is not about putting together a volume so you can store away at the library. It is meant to be an action plan, something you can do, you can use every day, every week. So don't think of it as something you need to finish, but think of it as a framework or a structure that allows you to begin planning and then begin acting on those plans and to fill them out over time as you get further down the road. Secondly, this is meant for both startups and for in-business folks. For startups, each step is going to be important and is going to be a sequential process. As you begin working, you'll start with step 1, move to step 2, etc. For those in business, you may want to focus in on a particular step, a particular area of discussion, and that may lead you to other areas, or you may be fully satisfied and happy, and that's fine too. The third point here is that while this material is very useful to apply for loans and to apply for SBA grants, you may want to do a lot before you ever get to that point. And so what this material does is to help you prepare for that day when you're seeking funding for which a more formal business plan might be required. So what are we going to discuss? Well, we'll discuss what a business plan is, why you have one, what it is and why you have it. We're going to talk about the various steps that there are in building a plan. And then we're going to talk about how you analyze your progress. It's important that you understand not just what you're going to do next, but where you've been and how that informs what you're going to do next. And that's all about data collection, usually financial information, and tracking. So those are the three pieces. And then there's a closing challenge, which we can discuss at that time. So business plan, well, a business plan is largely in financial terms, which is to say you're trying to set your sales and earnings targets and objectives. Now, for those of you who are just starting out in business, you're probably asking yourself as well, I don't know what my sales or earnings targets are because I'm just starting out. And that's fine. We're going to recommend that you at least guess, but there needs to be a lot of work before you ever get to setting sales and earnings targets. And that's what this presentation will be all about. So once you have your target, and I should add one more thing, a target may not necessarily be financial. It may be more personal, which is to say, I want a business that's going to grow to $10 million. Very few of us can say that, but that might be a goal. Another goal might be, I want to take my hobby and I want to make it into something that can earn me some modest amount of revenue over time. Or it could be, I have a job and I want to make sure that I have a business plan that will cover all of what my compensation brings to me in my current job. Each of these are fine objectives. You want to try to put them in financial terms, but personal objectives are as important as financial objectives. Then we're going to talk about, well, how do you achieve these objectives? What do you do in order to get there? And then finally, what are key metrics for you to track your progress and to understand where you've been and where you want to go? Here are the steps. One, analyze your market and your business. Who are you serving and what is your business? For those of you just starting out, it could be that you don't have a clear enough idea to know exactly what you're marketing, and that's fine. That's part of the process. For others, you may have a clear idea, but maybe you don't understand or haven't fully investigated what market potential you have. We'll talk about that. Once you understand the market and your business, you want to try to understand where are you in that market? What do you do in that market and how do you compare with your competition? And what's important for your business, in your business, for your customers to want to spend money on you and your business. We're going to talk a little bit about defining sales and earnings goals. For some of you, this is going to be problematic and adventurous, but still important to at least try. For others, you may have a much better idea of where you want to go and be able to identify metrics that will quantify that. We'll talk about action planning, we'll talk about a P&L, and then we'll talk about cash flow. So those are the steps, and let's, without any further hesitation, let's get into step one. Market data. You have to understand what your market is, who your customers are. This may be obvious to some of you. For some of you, it may not. But I will tell you that even business corporations that have been in business for a while do this every year just to understand, well, how has the market changed at all? Has it grown? Is it more diverse? Are there different demands of us that didn't exist the year before? So understanding what this looks like, what it feels like, is important. We'll get into the much greater detail on subsequent slides. Purchase drivers. Why do customers buy whatever is offered in this market? What determines their decision? Is it quality above everything else and price is less important? Is cost the primary factor? Is it service? Is it the ability to expect on-time invoices, to have a help desk that is available and responsive to questions? What is it that will drive consumer interest and behavior? Demographics, what do our customers look like, both in terms of businesses? Are these businesses large? Are they small? Do they emphasize one particular industry? Do they emphasize a particular technology? As well as consumer retail. How old are they? What is their gender? Where do they live? What is their disposable income? Competitors, who are my competitors? And there may be direct competitors, which is to say, if I'm in, say, the hair salon business, there are probably other hair salons out there. On the other hand, there may be personal grooming businesses which feature among their services hair salons. So we want to make sure that we understand the full range of competitors, because customers are going to be out there making decisions not based on hair salons, but maybe based on a lot of different criteria. You want to make sure you have an appeal for any customer inquiry that could relate to your business. Distribution channels, simply put, that means how do you alert customers that you exist? How do you sell them that you are the business to spend time with? And how do you distribute the goods or service that you're trying to sell? We'll get into much more of that in later slides. And then finally, seasonality, regionality. There could be certain times of the year when your business will boom or not. And then are there certain factors in your market which are changing and which could very well determine the outcome of your business? A good example is the pandemic. How has the pandemic affected various businesses? Inflation, how does inflation affect your business? These are exogenous features that can certainly impact every business, and you'll understand what they are. There's a lot of sources out there. The internet is certainly one of them. We'll talk a little bit about examples of how you can use the internet. Public company reports. There are, every company needs to submit a 10K report. These are quarterly reports, and they give you an idea of what the company sees as the industry trends, technology trends, and these things very well could be of interest to you and your business. Every library has a whole bunch of material on business. There's something called the Risk Management Association Reference Guide, which includes actual data submitted by real businesses on profitability, revenue size, assets, liabilities, for every business type in the US. And it gives you an idea of what kind of businesses can expect what kind of financial returns. It's useful to give you an idea of what you could expect in the way of returns in your business. There's government websites. The NAICS has a listing of every business and every industry represented in the United States, and would be useful to see, well, what kind of businesses are out there and how do these businesses relate to the one I'm in? How many businesses in what industry? It just gives you a context for your operating environment. It's helpful. You want to spend a lot of time at it, but it's certainly helpful to understand what the industries look like. There's trade associations and shows, which contain some very useful, valuable information. Trade publications and market research. I don't recommend that small businesses, particularly ones starting up, spend any money in market research. That you can conduct yourselves, but market research is critical to the success of any business. Competitor data. I have talked to some clients who believe they don't have competitors, and upon further inquiry, they usually admit that, well, they do. So every business has a competitor. The question is, what do they look like, and in what ways do they compete with you? You ought to understand what their target customers are, what their product range and features, price, quality. The point here is twofold. First of all, you want to understand what options are out there that your customers might be considering and how you differentiate yourself from those. And second of all, it may give you some idea of how you develop marketing information or how you price your product, or what kinds of quality factors will flow into what you decide to do. So it's important to understand customers. It's also important to understand what you are and how you compare to others. And the sources for this are very similar to what we already talked about. For some of you, particularly in, I'll say, the restaurant, local services business, you could become a customer, which is to say you could walk into a restaurant or you could walk into a retail store and find out what kinds of products are there for sale and where your product might fit in that and how they're priced. You can, sometimes you can talk to suppliers. Suppliers have a variety of customers, some of which are in your business, but you can also find out what other customers these suppliers have and what information they can provide you on how they see the market through their own customers. Trade associations, publications, we already talked about that. So competitor data is certainly an important part of this. There's something called a SWOT analysis. I will tell you that this needs to be done with some care and some expectation that you're not necessarily going to get any eureka moments coming out of this, but it's a good exercise. To the extent that you can get others to participate with you, either you have employees that can help you work on this, or you have certain customers that can help you work on this. You can do it by yourself, but you'll find that your opinion may be roughly right, but not exactly right. But it's a way to look at your business. And what you do is to look at your business internally, both in its good ways and its bad ways, hence strength and a weakness. And you also look outside your business for what there might be for an opportunity, maybe a technology shift, maybe a change in market demand, or threats. And usually opportunities and threats are two sides of the same coin. So what you do is you start with these general characteristics and you say, well, what are my strengths? And you brainstorm them as much as you can. And then you start making some pretty hard decisions about, first of all, what can be true? What can you confirm and verify best you can? And secondly, out of this list of strengths or weaknesses, what are the most important for you to consider? That's why getting outside opinion can be very helpful in this. I wouldn't spend a huge amount of time on it, particularly if it's just you, but it's a way of looking at your business, which you might find helpful. So there's a little market sheet you can put together on what the trends are, the competition, what's working in your business, what's not. And you'll notice that there are only 3 items in each. That doesn't necessarily mean you keep your to list to 3, but it shouldn't be many more beyond that. Don't have 20. Have several trends that you consider to be important and determinative in your success. So that's the first piece, is market analysis. The second piece is defining your marketing position. And this is where, particularly for startups, this is where it gets a little tougher. That's not to say it's impossible. And it's not to say that you'll necessarily come up with the answer immediately, but it's questions you need to ask yourself over time. And there's something called the 5 Ps. This is a little bit of a dated set of letters, but it's still true. Positionings, product service, pricing, place, and promotion. We'll talk about each. So I should say more about this. Positioning is where you are in the market, what customers you have, and what advantages you offer. There's such a thing, for instance, in positioning as market segmentation. You'll have a group of customers who more or less share the same interest in what you have, but may differ either in terms of price sensitivity, demographics, or location. It could be, for instance, that if you're in the clothing business, you may want to target women, as an example. The question is, well, is it all women? Or is it women of a certain age? Is it girls? And if so, do you have products that can serve several different kinds of segments in different ways? That may mean a different product portfolio for each of the segments. It may mean a different marketing message, but make sure you understand the various segments you're trying to appeal to, and recognize that your success in attracting one segment may work initially, but may not as you get bigger. You may want to focus in on a segment that's easier to find and easier to get to and easier to please, only to find out that this segment is relatively small and only serves as a stepping stone to other kinds of customers. Products and services. This is pretty straightforward for businesses that have something specific, tangible to sell, like shoes, for instance, or pizza. It may be less true for those in the services business, where the service may not necessarily be obvious to customers until you start explaining in a little bit more detail what it is and why it's of benefit to them. Pricing is the most difficult thing that any business faces. I know even for large businesses, there's a regular exercise in pricing to make sure that prices are not too low or too high. If they're too low, you're giving away profitability. You may also be flirting with difficult finances. If it's high, you may not be attracting all the customers you want. There's a little bit of an experimentation here in pricing. Recognize that this problem persists for everybody. Places, distribution channels. I may, for instance, decide that the best way to inform my customers of my existence is through the internet. It may be that the internet is also a good way to sign up customers and to deliver product, but it may be that it won't. That is to say, it's great for alerting customers you exist. It may not be great for closing customers. It may not be great for delivering your product or service. So each channel will have its own purpose and function. You want to make sure you optimize each channel for what its purpose is. And then promotion, advertising, networking, etc. Many people see marketing as only promotion, but as you can see, it is a variety of things. So that's the marketing piece. We talked a little bit about segmentation. That will depend on things like demographics, age, income, geography. For some businesses starting out, you may want to limit your geography only to those areas that you believe you can serve directly and cheaply, that is locally. You may want to try to expand that geography beyond a local environment. For some businesses, you're automatically national. I would have to say something like, the retail jewelry business. You may very well find that your best geography is going to be national, but of course, that raises additional questions about the costs of alerting this national audience to your product, and to make sure that you have a distribution channel set up to close and to deliver your product. Lifestyle could be important. Psychographics. Psychographics refers to the psychology of a consumer, of a customer. So the easiest example I can give you is cars. There are some people who refuse to buy anything less than a Series 7 BMW. I'm making this up. They see themselves as Series 7 BMW customers and nothing less. And in which case, of course, they're quite happy to pay whatever a Series 7 costs. Others may not care about prestige. They care about getting to the grocery store or getting to a job, in which case the car they select may be new and may be used, but it's certainly cost will be one of the factors. So psychographics plays into it. It could be it's relatively a minor element of why customers buy from you, but it also may be important. And understanding what your brand looks like and how you're perceived by the market is an important part of your marketing and of your delivery. And then finally, what industries are you part of, and what distribution channels do you wish to choose? The niche piece of marketing is a very difficult and delicate thing to come up with a final answer. So this has to do with marketing. What is my product and service? And why is this going to be important for customers to spend their money on? How am I different from my competitors? And to some extent, this is a little bit of practice to figure out how you position your business to customers, so that it both explains to them what you do and explains to them why you are the only person they should consider in doing it. This is one of these areas that may require some time for experimentation and for review of how you're doing. So niche competition, important part of this. This is for people in business, although I think to some extent it will help formulate the thinking of those who are starting out. There are such a thing as growth customers. These are customers that will start with you and will grow as their needs increase. So as an example, it could be that you start out with a carpentry business, and you do carpentry jobs for customers. And it could be these customers will want to grow into much larger kinds of projects. Business customers, the same. You may want to start out with a certain kind of product or offering, and then begin growing those customers as their needs expand and as their confidence in your ability to deliver them expands. You will find, most of you will find that when you get into your business, or you already have your business, you have certain customers that come to you anyway. They like what you do. They don't want to change. You don't have to spend a lot of time marketing to them because they already know who you are and what you do. They're good repeat customers. You value them, but you don't necessarily use them as a factor in your growth because they're going to come to you anyway. There are stepping stone customers. We've talked a little bit about this. You start with one customer with one kind of service, and then you move to another kind of service. Examples can be landscaping and architecture, landscape architecture. I may start by doing nothing more than mowing lawns and clipping bushes, but it could be that as you begin building the confidence of these customers, they'll want to start experimenting with your other kinds of architecture services. So recognize that a customer you begin with could very well lead you to other customers who want more from you than you could have delivered or had confidence in initially. And then finally, there are these undesirable customers. Every business has them. Those of you who are just starting out really don't know who they are until you experience them. But they tend to be customers who are very demanding of low price, or who are very demanding of much higher service than you are unable, or you're able or interested in giving. It could be that you spend more time in dealing with them than they're worth. And at some point, you may want to decide to communicate to these undesirable customers that thank you very much, and I'm sorry I can't serve you. Please, there must be others who can serve you. Those of you in business probably already know who these undesirable customers are and are already able to avoid them. But recognize that not every customer is the one you want. So trying to figure out who the ones you want and who the ones you don't want are a whole part of the business development process. So here we are with positioning. Who are your target customers? Who are your competitors? What are my competitive advantages? And again, you don't want 58, you want several. Defining year-end sales and earnings. And we talked a little bit about this, how challenged this is for new customers, but I will guarantee that you will get benefit from at least guessing. I should say that while all this material in this course today is important, and I'm really glad you're here, a lot of this is simply start information that you can begin to use only with the kind of consulting expertise that SCORE can bring. So as an example, we've talked a little bit about niche marketing and your target customers. It could be that your SCORE counselor can provide you with greater clarity about what markets you can define and how you can go about getting better information to define those markets. So let's talk a little bit about sales earnings goals. I think the first thing is to try to figure out, well, what is a unit of sale for your business? Is it a pair of shoes? Is it a project like finishing some home remodeling project? Is it simply hours? What is a unit of sale? What are you selling, and how do you reduce it down to something you can quantify? What is the sale price for this unit? It may be easier for tangible items. It may be less so for service. I can tell you that you can find out a lot of very useful information in Google. So as an example, if you're an accountant and you want to serve business customers, not home retail consumer customers, but business customers, you can go Google what the hourly rate for a business accountant can be, and you'll come up with sort of standard numbers, which you can use for your own price. But coming up with unit price is important. How frequently do you expect these sales? If I'm in the construction business, I'm not going to get a sale. I'm not going to get 3 sales a day. Couldn't possibly satisfy that demand. It may be more like 3 or 4 projects a year. The question is what frequency? If I'm selling, say, retail items like clothing, I may expect and want to get a few sales every day or 10 sales every day. What frequency am I expecting? And over time, this frequency is going to change. When I'm first starting out, I may not get a sale for several months, after which I'll get a few. And then as I keep marketing and as I keep bringing in customers and bringing in satisfied customers, I may get more. Question is, how do I quantify that? How do I estimate or guess that? What are my costs? What are my direct costs? If I'm selling product, I'm going to buy it from somebody else. I may make it myself, and I may have labor and materials associated with making that. So what are they? And then finally, what are the indirect costs? What cost do I have in utilities or purchasing support services or rent? All of these things factor into your estimates. For many of you who's starting out, you're going to have some costs, before you ever start your business. Those are startup costs. And you want to make sure that you have funding to cover those startup costs, and then understand when you start getting revenue, what additional costs do you have to have that revenue cover? And at what point do you start breaking even, which is to say you're getting sales in and cash in to cover your ongoing expenses. We'll talk a little bit more about that, but that's all a part of this exercise. I should say one other thing. In your business, you're probably going to want to look at websites to understand what some of these things look like. And again, Googling trade association information, looking at the RMA reference guide I mentioned can help you come up with some of these numbers. You're going to be wrong for some of these numbers, because who can predict the future with any degree of accuracy? But you're going to be right in some ways, or you're going to learn, boy, I was wrong here. How do I correct that? How do I get better at estimating these things? But not documenting these things mean you'll have no memory of what you've done in the past and how that might influence what you do in the future. Action plan. Everybody ought to have one. This is what it tends to look like. So I have a whole bunch of priorities. It could be for a startup business. My priority is understanding my customers and understanding my competitors. And this could be just you doing this. And that's the highest priority. And that's all you're going to do for the next several weeks, a month. Your SCORE counselor can help you understand timing of this, but that's what you do. So the priority is market analysis. Who is you? Try to give yourself some kind of a deadline to complete it, and try to understand, is there any cost associated with this? It could be that for people in business, you'll have several priorities. Sales acquisition could be one. Cost reduction could be another. Customer service could be a third. The question is, what's the priority? And that priority, by the way, is determined by its financial impact, both in terms of what you think incremental revenues might be and the costs associated with it. It could be that something in acquiring new customers is a big deal because these customers are big and they're cost insensitive and they're great. But it could be that the cost of introducing yourself to these customers or the cost of serving these customers is so high that while the priority is important for revenue growth, it's something that will fall to the bottom of the priority list in terms of its costs. So each one of these is a priority. Determine what they are, try to assess the importance of the priority, and then start marching through this priority list step by step until you're able to either say, well, we're done, or it may generate a new list of priorities for you, but at least you've got something you've documented and something you can act on. These are some of the things that could affect priority. Sales. You may find out, for instance, that there are partners that you could use in your marketing effort. A good example might be accounting. It could be that if you can align with a legal firm who will have customers who will eventually need accounting services, that making yourself known to these lawyers can help you in your marketing. So what kinds of things can you do to increase sales? What kind of relationships can you build with complementary services that can help you market? Your costs of production, logistics. I've noticed that in small businesses, particularly those who are selling tangible products, they may find it difficult to get suppliers that provide them the low costs of goods because you just don't have enough demand. Okay, so you'll start out with suppliers that can produce what you want for now. And then over time, you may want to change suppliers as your growth increases demand and you can order more and more units for a particular production cycle. It could be that you're able to come up with ways to replace certain products with others that are either more convenient or higher quality. But a lot of this has to do with your experience and the volume of business that you have. Quality control and customer service. One of the things I like to point out with customers is that marketing is every way you touch the customer. It's not simply promotion. It's not simply identifying the right target. It could be that one of the more important elements you have is reliability. Your customers expect a certain response. They expect it at a certain time. They expect consistency. And it could be that part of your value add is that you're always available anytime customers want, or you're available instantly, or you have complete answers to questions they have whenever they have them. I'm making this up a little bit, but it gives you an idea of how that might work. It's also important that you understand how your support services can work. Do you bill on time? Do your customers pay on time? Do you put them in a position to know how to pay and when to pay? And then finally, office space, retail locations. Technology management is a big thing because technology is changing so much. It could be that there are IT support services that you can acquire right now that didn't exist 6 months or 8 months ago, or that they are much cheaper than they were 6 months or 8 months ago. So understanding technology and how it may affect your cost and operations is an important ongoing process. So that's the action plan. And then there's the P&L. I should say that every P&L is going to look roughly the same. Please don't think, especially if you're a startup, that P&Ls require some magical and mystical level of awareness and intelligence. They don't. It's pretty straightforward. And every P&L looks as it is here, roughly the same. You start with sales. What are my gross revenues? And what you're going to try to do is to identify those gross revenues by type, either type of product or service or type of customer, the price, and I should say the revenue associated with this particular segment, and the frequency. So you're going to have a variety of things you're selling. They're going to be broken up into segments, broken up into sales transactions, and you're going to come up with a net sales revenue. Out of that, you're going to deduct the cost of goods sold. For businesses that do not sell product, do not sell tangible goods, this might be referred to as cost of sales. But either way, it's the costs of directly developing and delivering your service or product to the customer. And out of that, then you get gross profit. So you sales net revenue, total revenue, less cost of goods sold is your gross profit. This is your fundamental profit driver. If you're not making enough gross profit, you're never going to make enough to make a net profit. And what's a good gross profit? Well, that really depends on industry. If I'm in the consumer industry in retail goods, I'm going to try to shoot for a gross profit that's going to be in the 50% range. It may not be 50%, it may be less than that. And certainly as you're starting out, it may be much less than that simply because you don't have the right amount of revenue, but it's going to be roughly 50%. That ought to be the target. If I'm in the construction business, it's not likely that I'm going to have a gross profit that's much higher than 25%. If I'm in the restaurant business, I may not have a gross profit that's any higher than 35 or 40%. If I'm in the consulting business, I may have gross, because there are no hard products to sell, it's only labor, I may have gross profits that are in 60 and 70% range. Same with software. To some extent, the RMA reference guide can give you an idea of what typical gross profits are for particular industries. But one way or the other, you want to make sure that your gross profit is roughly what it should be given your industry and your business type. Then you subtract your operating expenses. This is your selling and distribution, marketing, administrative, rent, utilities, you name it, insurance. All of that cannot be related to a direct transaction. It's an overall cost that allows you to run the business as opposed to make a particular sale. And then you deduct your operating expenses from your gross profit, and you come up with your operating income. Sometimes it's called EBITDA or EBIT. It doesn't make any difference. It's still income before you deduct taxes and before you deduct interest payments. So that's what this looks like. For those of you who are starting out, this may be a lot of guesswork. Your score counselor can certainly help you at least structure what it looks like. And as you get more experience, you can fill in this P&L over time. There's the cash flow statement. Now, some of you may be lucky enough that you're in a position where every time you make a sale, you get cash instantly. So internet sales are a good example. If I'm selling something online, I'm going to get the cash for it right away, usually. On the other hand, some of you may be in businesses where you sell your stuff, you sell your service, you have to invoice them for what you've sold, and you don't get the cash until later. It could be much later, depending upon what your expectation are of the customers and what your demands for payment are from the customer. Typically, for those businesses that invoice for cash, you want to try and target 30 days for timing of payment. In other words, for an invoice, you're expecting payment within 30 days. If you can do that, you're probably about as good as you're going to get. If it's 60 days, that's a problem, because you've sold something, you've given the customer something, and they're sitting on the cash. They're not giving it to you, and you want to make sure that you have ways of managing that cash flow in and also out. If I acquire, say, a product from my inventory, I may not pay the supplier for another 30 or 60 days, just as you may not expect payment immediately from your customers. The question is, how can you manage the payment of that? Can you wait and pay them a little bit later? Do you run the risk of losing a supplier if you can't pay them on time? The same thing with customers. You can demand payment initially from a customer. You may not expect it, and you may not get it for a while, but you don't want to lose that customer because eventually they'll pay. But what this cash flow statement is, it gives you an idea of what your cash looks like. Actual cash, not sales, cash. So I know exactly how much cash I've gotten in, how much I've been able to collect on receivables, any other cash infusions like loans. Each month, I'll know what I'm getting in terms of cash. I start out, if you can see at the top, with a certain amount of cash on hand. I get additional cash as the month goes along. And at the end of that month, I have a certain amount of cash. And also during that month, I'm going to have costs and expenditures. And I want to make sure that at the end of the month that I have a positive cash flow, which is to say, in combination with cash on hand and cash receipts, I have more cash than I had to pay out. For those of you starting out in business, you're going to have a negative cash flow. That's just the way it is. You want to make sure that you have enough cash on hand in your bank account or wherever to cover any cash deficits. But at least you'll know how you stand each month in your cash position and how that cash position can improve or not over time. Every time you have a negative cash position for a particular month, that means you've got to come up with cash from another source. may be easily available, maybe through a line of credit. It may not be easily available, in which case you got to scramble to figure out how that works. But this cash flow statement is one of the critical elements of success. I can't tell you how many businesses run into trouble because they have not forecasted their cash. And the reason they haven't been able to forecast their additional cash requirements is because they haven't tracked what their cash history is. So this is a tool that allows you to do that. So here we are, 6 steps. We talked about analyzing your market, how you do that, how you define your position within that market, projecting sales, earnings goal, recognizing it's problematic. It may not be entirely accurate, but it's important that you start, and it's important that you continue to improve on your ability to estimate your future growth and goals. We talked about having an action plan. We talked about the P&L and the cash flow statement. I would encourage you, not just people in business, but people starting your business, to review these numbers, these tools each and every month, understanding what they look like, helping you understand how you can improve, what mistakes you've made, and how you can adjust to those mistakes is all a part of what comes out of this 6-step business plan. So we talked about reviewing your P&L, your cash flow, accounts receivable. I have noticed that many of my customers, many of my clients don't track their accounts receivable adequately. They just assume their customers are going to pay. And part of getting a much more manageable accounts receivable is your terms. What terms do you have? Do you require they pay immediately, or do you require they pay within 30 days? They may not satisfy that requirement, but at least you're on record as telling them what it is. And then following up, sometimes customers forget. Sometimes they're big enough so that your invoice sits on some desk somewhere and it's being ignored, not because they don't want to pay so much as they're just busy and they're not paying attention. So following up on that is an important part of it. And then finally, if you need to fire a customer, you do it, because that customer is costing you much more than their value suggests. This also is going to help you understand your competitive advantage. Aside from financial statements, you may want to have key metrics that allow you to understand what your business looks like. So a key metric might be product returns. It could be repeat customers. It could be response time to inquiries about technical help. It could be response time inquiries about billing. You want to try to track all of the activity aside from your financials, all the activity that will indicate operational excellence or some kind of breakdown in your operational quality. And then every business is every month, you're going to have a series of actions you want to either fine tune or to check to make sure that you're on target or to add to. So these are all a part of your monthly planning process. So I guess at this point, Tim, there's only about 10 minutes or so left. Do we have any questions?
Yes, we do. And that was great, John. Thanks a lot. I should say up front to everybody that, the flagship course that SCORE runs is actually a 6-night program. It's over 12 hours of material. And John just did an excellent job of hitting all the high points in less than an hour. It's well done, John. If you have questions, anybody out there, please type them either in the chat window or in the Q&A box, and we'll take them now. And so the first one is from Eileen. She says, I'm a life coach focusing on forgiveness and communication. It's startup biz. Can you specify how a business plan might be different for me? My goal is life transformation. She also says, I do all my work by phone and Zoom, nothing in person. So offhand, I guess I'd have to comment that she's in a business that has low capital requirements, therefore probably doesn't need a loan. Those are the good things. The bad things are probably in the marketing and so forth. So John, do you have any comments for Eileen specifically?
Yeah, I do. And by the way, I agree. If you're delivering on phone or through Zoom, you're going to have low operating costs. But I think as I'm hearing you, if I'm hearing you correctly, you're going to have a challenge in describing to customers what life transformation means to them. What do we mean? Are you offering are you offering employment services to help them better position themselves for employment? Are you offering them services for health? Are you offering them service for self-esteem? What are you? What's your offer? And what benefit do customers get out of your service? And are there certain demographics that you would try to target? Older women could be one, or teenagers could be another. There are some more descriptions you're going to need in order for you to have to give customers a better idea of what you do and why they want those services.
Right. Yeah, and I imagine that because of the advances in telemedicine, telehealth in the last couple of years, that people will be more open to this. Okay, our next question is, are labor expenses considered part of operating expenses, or are they included in cost of goods sold?
It depends on where the labor is applied. If the labor is associated with a particular product or service transaction, then it's a cost of sales or cost of goods sold. If it's not associated with a particular item or a unit sale, then it's an expense. Think of it as a cost directly associated with delivering a product or service to your customer directly. So it's goods, it's labor, and it's shipping or fulfillment. In some businesses, some of their employees are part of the cost of goods sold because some of their hours are associated with that, and some are not. I usually don't recommend that clients get into detailed understanding of how many hours or minutes a particular employee spends on a particular sales transaction. If most of their time is spent in supporting sales or in supporting operations that you can't identify with a particular unit of sale, then define them as an expense as opposed to a cost of sales.
Got it. So the next question is, can a discount introductory rate that is extended be classified as a business loss or an expense?
As a discount?
Right. Can a discount introductory rate that is extended?
So I'm not exactly sure I understand the question, but let me see if I can guess. If I discount a product, that's simply what it is. It doesn't necessarily mean that it's going to be a loss or not. It just means that you've decided to discount that price. Now, there better be a good reason for discounting that price. You want to make sure that you don't have a permanent discount, in which case, yeah, that discount could be baked in to your business model, and you can never make any money because you've discounted it forever. So have a reason for the discount. New customers, time of year, certain kinds of products, and then make sure that discount has a life, which is to say, this discount is only good for X amount of days, or this discount is only for this one product for this amount of time. Otherwise, you'll have permanently lowered your price and probably permanently lowered your expectation of profitability.
Very good. So one individual wants to know how they can get in touch with you, John. Do you have any contact information in your presentation, or?
Well, I'm through SCORE. So if you would like, you can simply apply for mentoring through SCORE, mention my name, and voila, I appear.
Very good. Yeah, the 6-day training course that I had mentioned, we haven't done it live in its original form since COVID hit. We're talking about bringing it back, and we're also trying to determine whether it should be a webinar format or conducted live once again. We've done programs, by the way, just this year. We've done 3 programs, which were multi-day programs that pretty much followed the courses. We have one starting up in Westport this Tuesday for 4 Tuesdays. And it will be live at Westport Library. If you wanted to attend that, you'll get a lot of the same information that we used to ran in our 6-day program. Okay, with that, I think that's the end of our questions. So again, SCORE offers free individual mentoring. Please use the link on the screen or visit our website and click request a mentor. For information about other SCORE webinars and workshops, please use the calendar on our website at fairfieldcounty.score.org. You'll receive an evaluation via the email today's webinar. We'd appreciate it if you would fill it out for us. Tell us what you liked or didn't like so we can improve on the program in the future. On behalf of SCORE, I'd like to thank you all for attending today's live webinar. In closing, a big thank you to John Harmon and our sponsor, M&T Bank, for today's presentation. Thanks, Brian, for coming. Have a great rest of your day. Thanks.
Thank you.